Let us look at an example of the statement of cash flow. This is a very basic and simple example which we are going to take a look at. As you can see here, we have the XYZ company, the balance sheet, a very simple balance sheet with a very limited entries. Then we have the income statement, again just a one line. Since we only need the net income, so we have just mentioned the net income here and eliminated the other part. Then we have the cash flow statement. But before we start with the cash flow statement, let's try to understand this matrix here. As you can see, we have mentioned the increase and decrease, the current assets and the current liabilities. Now, if there is an increase in the current assets, we need to subtract the amount. We need to deduct that amount. Why? The increase in current assets simply means that we have purchased some asset and we have paid cash for that asset. So we need to subtract that. A decrease needs to be added to this statement. Now, why added? Decrease means that we have sold some of our assets and in turn we have earned some cash.